Now, obviously, the SPAC phenomenon has arisen, and we're even seeing M&A deals happening between companies to try and create sufficient scale to make themselves, SPACable. Lots of things like that. But when they ask the question, how do we make sure that we do this successfully? I always say to them, behave as if you're preparing to list. Behave as if you're preparing to do an IPO. Actually set yourselves up so that you have all the right governance in place. You are prepared to have all the transparency that you guys have all been talking about.
Yeah.
Because ultimately that is the route to success. When, SoftBank comes into the market and starts asking you difficult questions, you need to know what difficult questions they're going to ask because of the diligence they've done. You need to have a credible, cogent answer, and you need to have a solution for every problem that they identify. And you need to do that work before they even land, right? So you need to almost do a due diligence on yourself. You need to do your own governance. And so I think for me, that's been one of the big takeaways of this conversation, is that we all feel that the ecosystem could benefit a great deal from a sort of paradigm shift in terms of how we see transparency as a fundamentally important part of what entrepreneurs do and what investors and the broader public who are interested in information, I think, all demand. Would we all agree on that?
Yeah, to me, I think the word governance is this nefarious concept that people don't understand, but it actually has some very concrete and very tangible things that you can break it down into. And it is worth an entrepreneur educating themselves on that, as much as investors, by the way. I lay it on both people, on both sides, if you like, to make that happen. And the idea that a company is kind of higher, if you want, than the entrepreneur, and therefore belongs to everybody involved in it, is the mentality that you need to have. It's not mine. It's not, I decide, I make the decisions. It's, you have to bring the group along. And sure, we can put everything you want in a shareholders agreement, which we do. And we spend hours and money doing that, Abdullah. But at the end of the day, it actually shouldn't require any of the legal documents to govern well. It should require understanding, communication, transparency. You bring the good when, you tell us about the good and the bad.
Right.
And vice versa, right? You can say, I can't back you any further. Let's find another investor to come and back this business and so on. But that requires a whole other thing that's outside of legal documents, right? The legal documents is kind of like your last resort, really.
They say that a good agreement is written for a bad day.
Yeah.
The day you have to dust out the agreement and start reading it, surely something's gone wrong. Like when you're looking for something, either you don't have a good intention, that is, you want to use that agreement for something, or somebody has gone on the wrong side as per you to do that. And there is no shortcut for good governance. Thou shalt not steal has stayed as a basic principle of humanity from almost the time it started. So you have to have the interest of everybody in mind. So if you're a founder, if you're looking only for yourself, you're on the wrong anyway. When somebody else's money comes in, you become a fiduciary responsible person for all that money, to manage it, to give it the best result you can possibly give, correct? Those are principles, not just of law, or principles of governance of life in general, okay? So those things, when they lose sign of that, that's when problems happen. And people who have that principle in mind can, in my opinion, surpass any issue that comes because it's solvable. It becomes suddenly solvable because your intention is right. So I believe, one of the biggest diligences that we can do is to look for good people to back. Okay, they will make mistakes in doing businesses, but sure, that's fine. That's the risk we take.
And I echo what you said, the transparency of information. I mean, knowledge is power, but actually the adage of serial entrepreneurs make the best entrepreneurs. And now what you're seeing is the employees of successfully funded and exited companies, starting up those companies. You're seeing a whole wave of talent and people who have experiences with these challenges that are now doing it from the beginning in a very different way to people that may have been around 5-10 years ago without that knowledge. And I think if that knowledge can be democratized and people can learn from the experiences. I mean, SPACs on you. How do you do it? Why should you do it? What type of companies should do it? How expensive is it, etc. Those questions aren't answered. The highlight reel that you read in the news is the success, but what's the right process of doing it? That comes with maturity, experience, and time. So I think that will come with time. But again, it goes back to what I said, the siloed even geography. Ultimately, for companies to be successful, they need to scale. And you need to think outside of your markets. How can you have access to people who've done it so that you can learn from them.
And second time entrepreneurs, I have to say the dynamics around them, or third time, or whatever the case might be, is quite interesting to watch these days. The speed in which they raise,
Yeah.
the efficiency in which they get backed, obviously the way they communicate, they've, learned a few
Less
tricks.
hesitation to blitz scale as well, right?
Yes,
Yeah.
absolutely. So
Right buttons, right.
I
speed.
say
Yeah.
don't. The chances of becoming a unicorn. I don't know what the probability is. It must be incredibly low. I think get your first exit out of the way, make some money. Maybe not a ton of money, but make some money for your investors, for yourself.
De-risk yourself.
De-risk yourself. Buy the house, right?
Yeah.
Make sure you put money away for the kids or whatever it is, and then do it a second time. Because the second time, the entrepreneurs I see doing it a second time now are having a ton of fun, in my opinion, right? Because it's the familiarity of what to do and how to do it takes away some of that anxiety, right? Dealing with investors, dealing with shareholders, and all the other things, and really gets you to focus on: am I building a great product? Am I building a great experience, and so on.
Yeah, absolutely. Yeah, I think we're finally getting like second time, third time founders in our region, and it's kind of elevated the entire kind of discourse right now, right? Like the whole kind of frame of
It's an
operating
inflection
different-
point in any ecosystem.
100%.
Right?
Yeah, 100%.
So, what are your predictions for the next 12 months, Khaled?
Predictions for the next 12 months?
Yeah.
Well, I think we're just going to keep charting the course that we've had, which is like massive acceleration in funding, huge new number of new first-time founders entering the ecosystem that have, leaving their sort of more quote-unquote traditional jobs in corporates or at other larger startups. So that's just kind of going very, very, very quickly. So I can't imagine that that's going to change. I think that maybe there'll be like a wobble in public markets elsewhere, which has a blowback here in terms of how we think about valuations. So I think one concern has been that valuations across the region and globally, right, like are red hot.
Yeah.
And so what happens if you're caught at the top of the market? Worry about that a little bit. I mean, our thinking has been to kind of shift a bit downstream in our portfolio construction to seed in anticipation of that. Whereas we were set up originally to be like a Series A, Series B investor, I think now we're kind of like going to be more seed than A investor in anticipation of a potential shift. But also because, like, to that point, the market, our region's not, PK is saying that their exits like 80 million, 100 million, 200 million, 300, 400 million. I think the average exit's probably going to be in that range, 200 to 600, right? And that'll be a great outcome. Our region is small, right? Like, just economically speaking, we're not that big. So we can't have multiple multi-billion dollar outcomes. We will have, I'm hoping we'll have a few, but then, we're typically going to get something in that smaller range just because the size of our economy is not that big. And so we want to kind of build for that, and but expect some kind of tilt there at some point.
I think as we come out of the epidemic and the world starts going towards the normal, there are a few learnings that we've learned in this. In fact, anecdotally speaking, I see the quality of founders, early stage founders coming forward is actually better than what it was before. Before there was a lot of froth. Now people probably have had more time to think their ideas, and they're not actually hustling as much in terms of physically going and spending time. But the thought process has probably been more articulate. Their output is actually more deeper thought out. They've looked at stuff and also realized, for example, efficiencies in terms of the diversity of the teams across, all those things I'm saying, which I believe will give us a second level of impetus, in my opinion, where you'll see better quality deals, I hope, with this, coming back. People will be more efficient with their time, will be more efficient with the money that they use, how they build companies. At the same time, we see this competition between hubs, which is good for startups. So good quality talent will be more in demand. The point that you brought up, this downstream talent which is coming down from these large exits, these large companies, the Kareem Mafia could be the starting point of the eBay Mafia in Silicon Valley. So you see that, and there's a chart going around which we've all seen of how many companies have come out of people who are Kareem, for example. These are great examples. What that will give is better, probably companies where people are doing a more efficient job of building companies than they would if they didn't have that kind of skill. So my prediction is that we'll see better. It will become a bit frothier. We're already seeing the seed stage valuations go far higher, then I believe they're reasonable at times. So you will see probably a kind of a, a bit of a, and that will probably come when the top gets hit. So it will go down, and we'll also see all the kind of support that you're getting. The cost of building the company is actually lower. The whole thing about regulation, building companies, all this is getting lower. So the overheads are less. So probably people will realize that a value creation requires them to be more efficient rather than look for larger valuations.
So from my side, one of the big trends I'm seeing is a really, really significant increase in capital coming from Silicon Valley VCs, US growth funds as well, private equity, and funds in Europe and the Far East. A lot of activity in the region. So I'm kind of wondering whether that's going to put pressure on regional fund managers, whether that's going to have an impact on, certainly valuations, but also potentially deal doing disciplines. These investors are coming in with very, very heavy deal discipline, legal documentation, due diligence, and so on. But the founders are willing to entertain that, even if there's regional money available, because they want the prestige of having, a Sequoia or a SoftBank or whoever on their cap table. What do you guys think?
So anecdotally, I'm unfortunately not an investor to see the actual terms for all of these deals, but anecdotally, my opinion is that it's extremely healthy for the founders from a due diligence perspective. I don't know that they necessarily come with premiums because of the prestige of the brands. You're likely to maybe take a haircut than just taking any money. So I don't know that it's going to create an inflationary issue from that perspective. But what I know, having spoken to many of the international kind of community, they are still hesitant on the region, and they're cherry picking their investments.
Yeah.
The interest has grown. I think their money can go probably a long way here compared to what's happening in slightly more mature markets, but they do want to see changes to the regulatory environment, the legal environment, the scalability of these companies to be able to come back in droves. So what's happening now, it's an investment in education of these companies to potentially come and invest more. But I think it's extremely healthy. I think the second phenomena that you haven't alluded to, but is similar, is international companies coming here, either to set up presence locally, or my big bet is that you'll begin to see a continued rise in M&A activity and exits as international players become more interested in the region and acquire companies that have been around for 5, 6, 7, 10 years, that have been building the businesses here so that they can increase their footprint in the region. But I think capital will continue to flow, that the competition is healthy. My one ask is that we begin to see more clustering of ecosystems within cities. Right now, it's not that there isn't enough co-working spaces, accelerators, incubators, there's plenty of them. But what I would love to see is a clustering of that into single locations so that we go back to that transparency of information, and that knowledge transfer is a lot more seamless than it being dissipated across different locations.
Defragmentation.
Correct.
To me, the diversity is always going to be healthy. What I like about international investors coming in is that actually the ones coming in are not just VCs. You have growth stage PEs or whatever coming in. You have strategics, you have CVCs, you have a whole bunch of things. The diversity is important because no matter what, this is VC or entrepreneurship is complex. And therefore different investors will have different views, different opinions, different theses, and different appetites. And that diversity is healthy for the entrepreneurship community at large, right? I'm not so fussed about the valuation part. I think it gets talked about so much, and somehow somebody's trying to find, a benchmark that makes sense. And probably it doesn't ever make sense. If you go back to the concept of VC, which is around partnership, and you're a minority investor, you're pretty well protected as a VC around your investment. Now you may get the valuation wrong, and you may be off by, if you're off by like 5 times, that's a different discussion. But if you're off by 15, 20, even 30%, who cares, honestly? We're over fussing the concept because the company will raise multiple rounds of money. And if you do believe the company is going to grow by 5 or 10x, you will have chances along the way as an investor to adjust some of this.
Right.
One round may be too high, another round may be a bit too low. The overall money put in if you really are a VC backing your company through the rounds, it should work out, right? It really should. Again, is the market frothy? I believe so too. But I'm not over fussed about valuation. I'm more fussed about finding that VC, those VCs or those investors who can take the journey along the way. Because if I put $1 million Series A, right, and I get a 10%, then to protect my position, I don't need that much capital, right? My pro rata, etc. But I need to make sure that there's another investor if this company is going to consume $30 million or $50 million of cash to take it along the journey, if that makes sense. So I think we're over fussing valuations. I think we need deeper pockets. We need the we need the bigger bucks, because businesses are expensive to build, becoming even more expensive when you put in the cost of engineering hires or talent hires and all of that. We have the added cost of multi-jurisdiction that we spoke about already. We need to have that ability to go the distance. And those investors, as far as I'm concerned, are friends, right? There was this old expression somebody said once about VCs, which is, some people characterize VCs a bit like sharks or whatever, but you never see sharks eating each other. Right? They work together, right? So everybody gets a piece of the pie at the end of the day. Bigger one, a smaller one, doesn't matter as long as we work together. We need success in the region. There are some wonderful entrepreneurs. I wish more, but wonderful entrepreneurs. We're finally getting to some really innovative ideas. Let's put it that way. It's not just another e-commerce website. It's people are looking and tackling real problems, real issues, and I wish that we just have the capital and the depth to take these things as far as it can be taken.
Great. Well, guys, thank you all very much for your time. I really enjoyed that discussion, and really appreciate you giving up your time to come and talk
Thank you very much.
to us.
Thanks.
Thanks.